Hey everyone, welcome to the Rogue Trader Academy weekly roundup. It is May 19th, and this might be a little bit of a short episode because there hasn't been a heck of a lot going on. And we'll bring up some charts later. We can take a look. But what's going on your side over there, Richard?
Nothing really. As you say, the market hasn't really moved in a week. Volatility has come in, i.e. it's dropped to sort of frighteningly low levels if you're a vol seller, um, but still worryingly high levels if you're a vol buyer, given the realized vols. So I would be surprised if anyone knows what to do in this market. And my best advice to myself at the moment is to, other than the systematic stuff I do, the prop stuff, I'm doing nothing at all.
Hmm. Yeah, I've often said there's the gift of being flat. Sometimes it's nice just to not have anything and just kind of wait things out. Okay, so hey,
So
why don't you share the volatility surface? Let's talk a little bit about the skew,
yeah,
how it's changed from last week, if it's changed at all, and what
yeah.
happened.
So this is Deribit's little vol surface viewer tool.
Mhm.
It's quite nice to get a feel for things. So as we can see, vols in the very short term are extremely low. So the at the money's 50 vol June 2nd. That's a week's time. 40% vol. Going out to June 9th, 43, and then rising to 50, and then kind of the at the money's 50-ish vol, maybe, yeah, 50-ish vol, all the way through, all the way to a year out.
Yeah, it's crazy.
Um, so, I mean, so anyone looking to sell the short end of the curve and buy the long is going to be overpaying for the long end and being underpaid for the short end. That may
Mhm.
not matter if the market doesn't move, but if the market does move, it's going to feel expensive. We've got this kind of vol increase one day, but
Mhm.
I wouldn't put too much store in that. That could just be caused because the prices in Deribit haven't ticked over yet, because this is just from what's in the market. And this sort of 70 vol out here, good luck trying to get a one day, 10 delta put. So the skew kind of sort of towards the puts a little
Mhm.
bit, except where in the long end, where it's, I think my numbers show me it's roughly neutral. Looks
Mhm.
more skewed towards the puts here. I think probably because of the log normal nature of the market. But yeah, so look, I'm rambling on. We've got implied vols at 40, which is terrifying for sellers. We've got realized
Yep.
vols at about 32,
Mhm.
which means that the 40 is still too expensive for buyers. We've literally got a market that's sitting on its ass doing nothing.
Mhm.
And I guess I'm pretty much guessing that no one's making money out of this. Buyers, sellers, spot traders, no one can make any money because
Yeah.
um, we've got here's the chart over the past, how do I say, 5 days. I mean, it's like the corpse has died, right?
Great. And
So
when you talk about, okay, so if I go to Devo on Deribit, maybe it's showing around 50 or something. You can click on it right now if you want. Up in the little four dots in the top left corner there, you can see the Devo.
historical vol.
No, the one above it should
Oh,
be.
volatility index.
Yeah, it's the lowest it's ever been. I guess what I'm trying to say here is, we've been so used to over the last year and a half, 2 years, 75, 100. If it went down below 70, 60, we're like, oh my gosh, it's so low. Well, now we're
Oh,
seeing, it just drift down. Will this become the new normal? Are we going to see a spike back up and have 80 vols? Yeah, I don't know. Who knows? This could become the new normal for a while. That's kind of a little fear I have there.
so
But
yeah, I spoke to a miner today, and for what it's worth, their view is that sell-offs in the short term are not unexpected, and a rally towards the end of the year would be kind of normal for the seasonal side of things, and given the halving cycle and bloody blah. And in fact, today one of the things I was doing in my day job was working out some hedging strategies for that miner, because they have a committed amount of capital, and they can fix the price of energy, but they can't fix the hash rate and they can't fix the price of BTC. And so using options to hedge the the worst case scenarios in the mining yield equation. But I got the impression from this conversation that miners are naturally optimistic. So
Yeah, yeah, I can imagine. Well, and, before this call, we were talking a little bit too how, well, the problem is everybody gets busy, right? But we had intended to move back into traditional markets where we all started from. We got really distracted with crypto, and that's great, and we'll continue with that. But because crypto's been a little, say, quiet, let's start going over and trading the spies, the FTSE, or fangs or whatever, and we'll commodities, whatever we're going to do, just to blend in some more excitement in our lives, because I kind of miss that adrenaline rush of something crazy happening. Because, well, yeah, I think, didn't you look at the numbers? Didn't crypto or maybe I shouldn't say crypto, Bitcoin and Ethereum have on average like a 12% or 15% move every 80 something days, or wasn't there some stat you pulled out like that?
yeah, I think we see at least a 10% move
Okay.
in a day every at least every 100 days, and
Uh,
it might even be more often than that. But I can't quite remember the numbers now. We definitely see a 20% move um, roughly once a year,
mhm.
whether it be up or down.
Yeah, and that
Um,
10%, it was, I do remember it was around once every quarter, maybe a little bit more.
hmm,
That's and here's the danger of this market right now. Sitting there thinking, okay, we've been stuck in this range forever, and you're not earning any theta, and you want to, so you start laying on thick iron condors or whatever you're going to do, and as soon as you do that, you're in for a surprise.
yeah.
Maybe you'll get away with it for a cycle or two, but I'd be scared of selling some July iron condors or something. I
No, I think this
This
is the
isn't here in July.
for me. This is the time. If you've made a bit of money at the beginning of the year, then take a break, take a holiday,
Yeah.
go and take 2 weeks off with the wife.
Or maybe
Har-
take a long straddle or something, or protect yourself on the downside. Actually, you know what? Let me bring up. I mean, everybody's different. I know we get itchy fingers sometimes, and it's hard to sit still and not do anything, even though sometimes that's the best thing to do. Let me share my screen, just because I'm going to show you what I had, what I drew last week, or actually no, this is like 2, 3 weeks ago. I
Yeah,
drew this, right, and we were right around here at the time. I thought, hey, if we can bust down, these are our sort of unicornish levels. And this is my, a very general technical analysis. Technically, I do have my technical analysis certification. I don't know if you knew that, but I
I,
don't lean on it too much. But and hey, it looked like it started to go down a bit, right? It was really testing the bottom of that range down there, but sure enough, we said last week we half expected it to go right back up, and it did. It's hanging around the bottom here.
mm,
It'll bust down. It will. But what I put on this chart, as you can see, what we've been doing, we've been trading very lightly. So I've been selling basically the last 2 weeks lightly every day. So this happens to be a Bitcoin chart. Same damn thing in Ethereum. Every day maybe I'm selling zero point 0.1, or every couple of days I'll sell a zero point 0.1 of a Bitcoin, a 10 to 20 delta. So that's why I put it right here. It tends to be, in between 29 and maybe 31,000 is the strike price, depending on where the price is that day. If we've had a little run up here, for example. And I'm also buying some downside protection because we're trading in Deribit, so we have to have the underlying as collateral. So we will take, if the price goes down, the value of the Bitcoin or Ethereum that we're holding is going to be worth less. So buying a little bit downside protection. So I'm buying some 10 delta puts, which tend to end up being in the 23 to 25,000 range. That's all I'm doing, and I'm doing these. End of March. I've been doing them. Even today, I sold a little bit of end of March, and I've been buying the puts usually a little bit further out. 2nd of June, so a little further out from the end of March. The calls are paying for the puts, so it's not costing me anything. And I have gotten a little bit long gamma now. Typically we're short gamma with our style of trading when things are moving around, but I am a bit long now, which makes me feel a bit more comfortable. Theta, though, hovering around zero. Some days it's a little positive, some days a little bit negative, but not a big deal. Obviously, I'm not doing this to earn theta, but this is kind of what we're doing. I'm just sitting here biding my time. If we break down, great. These puts will be worth lots. These calls will be, I'll collect it all, and we can see if we can reset on a new level, get some drama. And as I said last week, if we push down hard, start pressing around here, well, then we've got some options. Depends on how it plays out. We can take some long positions. We can, play the gamma side a bit. We can sell some put spreads. We can even sell call spreads if we want. I don't know. There'll be at least there'll be some choices, some options, right? But right now there's not a hell of a lot of.
I like this trade actually because essentially what you're doing is selling a risk reversal, and I kind of like that because I think the risk is on the downside. Um, and if I'm wrong about that, then calls are a lot easier to hedge than puts because puts can get blasted through in one candle or less, whereas calls, you get time to go and buy futures and hedge it. So actually, that trade of selling riskies and then being ready to delta hedge the upside, I think that's actually a smart trade right now.
What I should point out too on that chart is that I do have trigger orders in for I right now I'm trading the July futures contract. So if we rip up or rip down, I will be buying futures if it goes up and selling futures if it goes down, and that will naturally hedge off on the upside those calls that are turning from 10 deltas to 40 deltas or something horrible. But so it won't really affect me that much, and then I can manage those as you said. So I won't wake up one morning to too nasty of a surprise if we gap up 12% or something.
Yeah, and actually also selling that risky sets you up nicely because it's a nice Vega play as well. So if you do then get the sell off, then you can be sure that vol's going to go up, which means that you don't even have to get in the money on your downside leg, and it'll still be in profit. So you could then, if you think you're at the bottom, you could cash in and just leave then your naked call as a which and the vol of that would have gone up, so you're then getting good time decay on that too. So I think frankly that short risky is a much nicer trade right now than a condor or a strangle. I think it's a good call.
I agree. Hey, you know what I should mention is starting June 1st, on Thursday, June 1st, we'll be doing a live segment with Deribit. And we'll be going through our trades, our book, what we're doing, but we're going to add a little bit of an educational component in there. So each day we're going to talk about something we're doing, and actually on June 1st we're going to be talking about getting out of trouble if you got, for example, short calls, and most people traditionally think, oh, I'm just going to roll it. That's what everybody learns, right? Hey, roll it out, roll it up, or both, and that's fine. We've got particular ways that we do that, which we'll cover the following, but more often than not, we've already sort of pre-hedged ourselves with futures, and we'll be talking about that. So that's cool. So if anybody is watching or wants to learn about how we hedge with futures to get ourselves out of trouble or to mitigate the damage until we can roll, we'll be talking about that. So, and anything else? I mean, there's not a lot to talk about this week, Richard. Let's hope that next week gives us some fireworks. We can start getting
Well,
some.
haven't you forgotten to say that the link will be in the description below and to like and subscribe?
Yeah, yes, like and subscribe. See, I'm a trader. I'm not a YouTuber. Okay, so it's going to take me a while to get the hang of whatever the hell we're trying to do here. So, but,
Yeah.
this is just us talking. This is what we do every day, anyways. We just sort of chat and talk about what we're doing. So I'm looking forward to how we kind of maybe develop this and go deeper and deeper into what we're doing. And
We could do like a weekly. Didn't we do a weekly outlook last week? And I think I said it's going to do nothing, and it did nothing. And I think you said it was going to be a unicorn hunt, and it might still be.
well, eventually it will be. We all know that.
Yeah, I think
Bubble's going to break eventually, whether it's in 2 days, 2 weeks, or 2 months. It's going to bust sometime.
there is this debt ceiling thing. In the States they're dicking about with the debt. They're doing this. They do this dance every year, don't they? Where they pretend that they're going to run out of money.
Yeah.
It's such a pathetic.
Yeah, and you know what's funny about that? The debt ceiling. Someone in Austria messaged me. It's a girl who messaged me who doesn't know a lot about this, who sent me a link to like a Bloomberg article or something saying the U.S. is going to run out of debt on this day. And she's like, oh my God, can this really happen? I'm like, no, they'll just print more money. Like, trust me, this is not going to happen. But you're right.
Yeah.
It's like every year, it's like this cycle where they talk about the U.S. running out of money. I mean, we already know they're already broke, but they'll just keep kicking the can until someday the system will break, I guess. I don't know.
I think I know that you're at heart a hard money advocate. I like hard money too, but actually, I don't think the system will ever break. I think it's designed not to break. The whole idea that it's a zero-sum game. The more debt you create, the more money, or the more debt other people are holding, so the more money there is. So just because you're creating debt, all it does is create more money. So it doesn't. doesn't break anything. It just makes everything a bit more expensive.
Well,
Uh,
maybe what'll happen is I don't want to be a conspiracy guy or like buy my bomb shelter, but maybe society will break before the system breaks. The gap, the
yeah,
middle class going and the gap growing until, but that's a different road, I suppose.
yeah, but society breaking is not going to be caused because people get angry about the money. It's going to be caused because people run out of food, or an asteroid hits, or a plague hits, or
But isn't running out of food a symptom of the money problems? I mean,
no, because people will always produce enough food to satisfy demand. Otherwise there'll be riots and people will die. And so that's much more pressing reasons to make sure there's enough food on the table.
really well. I mean,
Um,
food plants in the United States have a habit of catching on fire for some strange reason the last year.
well,
But
you've got to stop going out at night and doing that. That's
yeah, I know, right? But and
um,
maybe and then we need to have a discussion about universal basic incomes and all these kinds of things that'll lead down rabbit holes. Let's not talk about that. Let's just talk about.
so my prediction for the next week is I'm going to pull this out of my arse. We're going to do nothing until Tuesday, and then
Okay.
the market's going to rally a bit, and then plateau, and then sell off hard.
Hmm. I
And if
have
I'm right, if you trade that, you're watching, you trade that, and I'm right, be sure to send me a cut.
yeah. Send you a cut. You know what? I don't even have a prediction. Like I was thinking about. I mean, I'm inclined to think it's going to go down before it'll go up, but I don't even have. All I know is if it go down, we'll see a nice little low vol spike to trigger a bunch of orders. Then we'll go down. So if we see a little spike, I'm prepared for it to go down. Now, if there's a hard big spike, that'll be a bit different. But it'll have to be news induced. Like there's nothing happening.
No, it
The
could be a whale. It could just be like a whale has a tax bill or a divorce settlement or something, right?
divorce.
The market's so thin that it could be anything could drive it anywhere right now.
Well, and I think on the weekend too. I think we saw. I'm getting confused now because the market's been. It's like being in Groundhog Day. I can't remember one weekend after another, but you're right. Sometimes there's a 2 or 3% move and literally on nothing, and it goes right back because someone's sneezed. Really, and
Yeah,
I have no prediction at all, except probably more of the same. If I had to say it's going to go a particular direction, I would say down.
I think yeah, I agree with you. But you know how it is. People position for a down move, and then they'll get hosed on the short squeeze, and then it goes down. That's
Yeah.
how things normally play out. But I don't. I mean, I was just looking at some of the commentary from some of the market makers today, and there are no real big positions being taken. I mean, no one's doing anything.
Yep. No, I saw some comments as well, and literally everybody's just kind of sitting on their hands right now,
Yeah.
waiting. So I think we should do the same. And I feel good by not taking any position. I mean, I may be using 2% margin right now, nothing, absolutely nothing. So I think we'll just carry on and see what happens next week.
Okay.
All right, adios, my man.
Cheers.
Bye bye.